for joining once again. My name is Mandy Burton. Sorry if you're hearing this repeatedly. We just have had a slew of folks join. So one more time, I'm Mandy Burton, VP of Member Development for the Cobb Chamber, and we're thrilled you've joined us today. We're here to support you and your businesses in the community during this time, and we're excited to bring you this content and these experts this morning. So with that, I am going to remind everyone one more time that if you have any questions during the Q&A section or just as we move through the content this morning, please select John Loud in the drop-down menu and try to select John directly to send your chat to if possible, and he'll be fielding those questions as we go. So now I would like to turn over to our President and CEO of the Cobb Chamber, Ms. Sharon Mason, and she'll be kicking us off this morning. Sharon?
Thank you, Mandy, and good morning and welcome to about 500 of our community leaders this morning. We are so excited to have you joining us, and we know this time is difficult for you, and please know your Cobb Chamber, we are here for you to help support you, to provide resources, to provide guidance in every direction, both now in the short term and in the long term as well. And that is why our Chairman John Loud, our Chair-elect Britt Fleck, and I formed an Economic Recovery Task Force. And we just got this started to bring together a small group, especially of those who were most impacted by COVID-19, to work on a proactive strategy together around both the short-term and the long-term recovery for our community. And we know that together we can and we will overcome this. And that's also why with today's kickoff of this webinar, we're so excited to provide these great resources. And this is really just a start of what we're going to keep providing free to you, free to our community, to our businesses. Tomorrow, we're so pleased to partner with Kennesaw State University with their award-winning executive program. We have an 8-week free series for you for 500 leaders. We have up to 500 spots and have a few more spots available where you and your team can learn especially some great skills around leading in crisis and really helping you all overcome this as an organization. So we look forward to that 8-part series. And then also on this Thursday, we are partnering with the Georgia Chamber to hear from our Department of Labor Commissioner, Mark Butler. We know a lot has happened in that area, and there are also many updates there that should be very helpful for you. That's 10 a.m. this Thursday. All of this is on the Cobb Chamber's website, cobbchamber.org, and we encourage you to sign up for these because it does fill up fast, and they are free, but we have 500 spots per webinar. And not only sign up for these, but also go to the Cobb Chamber's website. We have a one-stop shop resource page for you that lists everything that your company needs to know. It has some great things there, including jobs available, all the information that we'll have today on the SBA loan, federal stimulus package, so much about helping you with teleworking, so much more. There's some really great ways you can support nonprofits, many other resources there, so check that out. Again, cobbchamber.org. We will keep adding to this, keep adding resources, so help us in sharing this resource. We want this to be a resource for you and for the community. And then also, we have been focusing as a chamber on partnering with many organizations to meet some very specific needs, and I'll give you a few examples. Last week, we launched Operation Meal Plan in partnership with the Cobb Community Foundation, in partnership with Center for Family Resources, with our nonprofits, and with our restaurants. And the purpose of this is to help keep our restaurant employees working and also help provide some much needed meals for our nonprofits. And already we have 23 nonprofits in just less than a week participating, and we have 16 restaurants benefiting from this. And we are so glad to keep working on this and working on many initiatives like this. We also partner with Cobb Travel and Tourism to help match, especially knowing so many in the hospitality industry need jobs or experiencing layoffs and furloughs. And so matching them with jobs available, such as the cleaning industry that does need some more workers. And there are also several other industries that are hiring. And so thanks to the partnership with Cobb Works, we have put this on our one-stop shop resource page of all the companies that are hiring right now so that you can share that with your employees, and we can continue sharing this in the community and be a resource to those who need it, especially those who are looking for work right now. And then finally, we have posted a Facebook page, Cobb Shops to Go, where we want to make sure we're promoting those deals that you have. We want to make sure that you're able to promote your deals and especially support our retail companies that need that help during this time, who are restaurants focusing on to-go orders and retailers focusing on a different way to do business right now. So we want to keep posting that and keep promoting that as well. I want to thank many of you helped us with bringing supplies and food to Dobbins for those who are quarantined to help our great Americans in a time of need. We're going to continue to look for opportunities like that. Finally, we do want to make sure that you fill out our survey to tell us in more detail about how COVID-19 is impacting you. And that the survey results will help us make sure we're meeting your needs, meeting you where you are, not only in the short term and the long term, because we are committed to helping you. We're committed to providing these resources and look forward to all continuing to work together to overcome this. And so that's why today we're excited about our great panelists, excited about the format today. And it's my honor to introduce our moderator, who is our Lao Security business owner, also president, longtime business owner, but also our Cobb Chamber chairman for 2020, and greatly appreciate the work he's doing to help this community in so many ways. So with that, I'll turn it over to John.
Thank you, Sharon. Thank you. And good morning, everybody. And certainly a big thank you for all 500 plus of you I know that have been trying to get on the webinar. We've gotten several calls this morning due to capacity. I assure you we have tremendously rich content as fast as this is moving and the hourly changes that I know that we've all been enduring now for weeks. There's going to be some significant impact of what you will hear today and some next steps for you. So I hope you'll be able to stay tuned. And as Mandy mentioned earlier, we are recording this. Look, we all realize we are enduring some unprecedented times. I know there's a lot of fear going on out there. There's a lot of sense of uncertainty going on out there. But be assured that we realize this is nothing more than a moment in time. Unfortunately, we know we've had tough days, and there's still going to be some tougher days ahead as we look at another month in front of us where we quarantine in place and we've got tighter restrictions from what's going on in our local municipalities, as well as the news we hear of what's going on around many other states. But remember, as Sharon gave so many great examples about us being in this together, and many of you heard me mention at annual dinner, as well as some of the marquee Mondays, we talk about together we can. And these examples of coming together with these underutilized kitchens, commercial kitchens, to be able to partner with the nonprofits, this is a great example of together we can do this. Just like this morning's time together we're going to have to be able to get the insight. We are here. The chamber is here to help you get through this. There's so much insight that comes to our chamber through our government resources, our bankers, our CPAs, and the rich business community that's out there sharing the goods and the bads that are going on. So I hope that you'll continue to turn back to the chamber, where this will be that resource and outlet to keep you up to date so that you can help and persevere. Remember, as all of us that are taking the time to be on this call today, we've got that determination in each and every one of us to persevere through this moment in time. If you will forecast and look down the road to September and October, and we look back at that recovery and how robust things are going to go, the chamber will be here with events and programming and ways to you to recover, help grow your business, find those customers, get the answers as how that means specifically for you. I do know at the beginning, Mandy mentioned that to send a specific chat to me, and I think she may have gotten that worked out. I'm going to look at that just a minute. So if you'll go down, the thread is going to get so large if we go to everybody. If you will hopefully find my name, John Loud, at the bottom, then you'll be able to send me that, and we're going to be able to get to some of the questions so we can get that rich resource back to each and every one of you from there. I had an opportunity this morning to have a call with Congressman Loudermilk, and it was a pretty insightful call to understand what it's like up in Washington now, what it's been like over the last month or 2 months as all this has been kind of boiling and coming to the front. And I asked him if he would take a few minutes to join us this morning. So we're able to get him over the information. And I want to ask Congressman Loudermilk to join us for a few minutes, give us an update from Washington, Congressman Loudermilk has joined the Congress back in 2015. He used to serve in the state Senate here in Georgia. Several amazing committees that is involved with so many of the businesses that are on this type of call today. But at this point in time, I'd like to throw it to Congressman Loudermilk. If you would join us, if you can welcome our group here. Thank you, sir.
John, thank you, and Sharon, thank you both for putting this on. This is incredibly important, especially this moment in time in our history. But look, let me preface anything everything I'm going to say here with this. America is strong. We're in better condition to weather this storm than we've ever been in history. We have the technology, we have the best healthcare system in the nation. We have the communities that are strong, and we have the people that are strong. Look, we've been through every aspect of this crisis that we're having right now in the past. We've been through pandemics. We've been through attacks on our nation. We've been through economic crisis, and we are better fit today to respond to this. I can tell you this, from what I've seen happen in the communities out there, I am so proud to be an American. Just the communities are what's going to pull us through. And what you're doing here today is that key aspect, because it's when Americans pull together and they help each other. This is how we pull ourselves through. And I think we're going to be stronger because of this. Now, one of the issues here that we're looking at is compared, a lot of people are comparing this to the financial crisis in 2008. There is a lot of difference between these two. First of all, we had a strong underlying economy going into this versus a virtual bubble economy in the other financial crisis. Even the week that this really started kicking off, the last week, full week we were in Washington, D.C. about 4 weeks ago, the weekly jobs report came out and showed that we were still hiring at an unprecedented rate. And so it was really surprising to a lot of people. And so we all of a sudden went to a screeching halt with this economy that was imposed by the government. So what's different between now and what Congress did in 2008 with the bailout and this $2 trillion package is vastly different. First of all, is where the money's going. This is focused on getting liquidity into the marketplace, getting needed capital to the businesses, and getting cash in the hands of the consumers. The government has caused this problem, and therefore in a needed response to a healthcare crisis, but the government ultimately created the problem. That's why we're looking at providing the ability for people to bring themselves up and out of this. There's going to be more questions than answers, I'm sure, even today, even though you got some incredible folks that I've known for many, many years that are going to be looking at this and answering your questions, but there's still going to be more questions than answers. Let me tell you this, if you got a pen and pencil available, my office, we're digging into this continually. We're also working with the regulatory agencies and those that are rolling out this program. We've set up a special place on our website, loudermilk.gov. That's loudermilk.gov. And if you click on business updates, you'll put your email address into the form there. We will be sending updates out regularly to those that go in there and actually put your email address into the form there. We will send out emails specifically to business interests. So to hopefully answer some of the questions that you have. And that's loudermilk.gov, business update is what you click. There were 3 phases to the congressional response or federal government response to this crisis. The first was an $8 billion package that was passed about 4 weeks ago. This was the healthcare aspect, the response to the immediate crisis that was facing us from a healthcare perspective. And so this was getting the money out for the test and helping the medical community. So it was an $8 billion spending package to actually deal with the healthcare crisis. The next aspect that was overlooked by most of the mainstream media was regulatory corrections. We started relieving regulatory constraints on financial institutions and the market. So there was a lot of executive action that was taking place behind the scenes. The feds lowered the interest rate to basically zero. They're putting more liquidity into the markets, making it available to banks. So there were some behind the scenes things that were going on phase 2. Phase 3 was this $2 trillion package. It is focused on the small business owner, getting the small businesses the liquidity that they need to continue working to keep their people hired. Now, there's going to be aspects of it that are probably, we knew that we were going to have correction. As compared to the Tax Cuts and Jobs Act, which we worked on for months. In fact, I engaged with the Cobb Chamber, my office did, on a regular basis to get input, feedback from members. And that was extremely valuable because we were able to fix unforeseen consequences in that bill. We have not had time to do that with this bill. This bill moved extremely quickly. And so we had to move it forward, knowing that there was going to be some areas that we just didn't foresee that particular instance that this was going to provide the solution you need. So part of what we did is we actually put in a lot of latitude for the agencies and for the administration to actually write rules and regulations to promulgate that. So some of this will be worked out as we go forward. But I can't give enough credit to those that have worked tirelessly. My staff working in DC, we were in our office for a while and then working remotely. And the input that we did get from the community, like I said, we didn't have the time for a lot of input, but we did get some phone calls, and my staff has been reaching out to many businesses, just checking on you. A couple of things that we were able to get into the bill from some of the chamber members. One was, can I just make a loan or withdrawal from my retirement account if I just need a little bit of cash to see me through my business through this crisis? And so we were able to put that in there to get be able to borrow money or withdraw from a retirement account without penalty for those who just need a little bit of money. What's going on with this SBA, the programs under SBA is going to relieve a lot of those concerns because it makes cash almost immediately available, as well as more down the road to cover your payroll, expenses of having payroll. And the great thing about this is under that part of the program, if you keep your employees on salary or keep them hired and you continue to pay them through this program, that aspect of it becomes a grant. You don't have to pay that back. There's also banks, and the banks have worked very closely with us from the regulatory side. Banks are allowing people to defer their car payments, their mortgage payments. And so this is really the community coming together. One last aspect of this is how we're rolling this thing out. We all know, and I've known Drew Tonsmeyer for many, many years, and he's a great individual, but and he works extremely hard, but we know the federal government moves slowly. It's hard to get bureaucracy to move in a quick direction. And so we actually received phone calls from many of the banks out there in the 11th Congressional District saying, look, why don't you let us make these loans and then we can work with the SBA on the back end. And so that is the way that this thing is constructed, is that where we want to empower your local bank, the business's bank, to actually handle this for you, to streamline it so it can go quickly, you can get cash in your pocket immediately. Let me close by this and make sure I've been told I gave out the wrong address earlier. It's loudermilk.house.gov, and then click on business link. So it's loudermilk.house.gov. And I have Colin Carr, who's on my staff, is on this call as well. And as you have questions, you're always free to call our office. And we'll be glad to help you in any way that we can. But your first call, when you're dealing with your business and getting these loans, I'm emphasizing, call your local bank. We're empowering them, and that's one thing that was put into legislation. Let's empower the local community banks, your regional banks. Those are the ones that can actually respond quicker. I've been on several calls with Secretary Mnuchin. They're trying to actually make the forms available on the Treasury Department website. And so through this, we work together. We're going to come out of this. We're going to come out strong. And so with that, John, I'll turn it back over to you.
Thank you very much, Congressman Loudermilk. Greatly appreciate you taking the time. I know there's lots going on, and certainly the insight you shared this morning. Thank you for sharing some of that with us today, and Appreciate the openness and sharing the website as well as your office being available for questions, because again, as we know, there's lots of concerns and uncertainty. I want to move on to our panelists now. Congressman Loudermilk shared some insight about Drew Tonsmeyer. Drew Tonsmeyer is over at the KSU Small Business Development Center. He's been the area director there for many years. Drew is a former president and CEO of a Chamber of Commerce. He has worked with many businesses throughout the region, from retail, manufacturing, service-related businesses. And what I'd like to do at this point is to throw things over to Drew to kind of start to give us some insight from the SBDC, as well as other things that he's learning and get us up to date from this point. Go ahead, Drew. Thank you.
John, thank you very much. First, let me say thank you to Congressman Loudermilk. As he mentioned, I've worked with the congressman for many years, and the SBDC, or Small Business Development Program, is a program directed under Congress. We are partners with the U.S. Small Business Administration, and in Georgia, we have 17 field offices. My office is located within Kennesaw State University, and the SBDC is actually a national network of over 1,000 SBDCs throughout the country. And normally we work with small businesses to help them grow and prosper. But when we have disaster situations, be it a tornado or a hurricane, we go into disaster mode. And so the SBDC is now focused on disaster, not only in Georgia, but throughout the country. So we've been used to this process. We understand some of the mechanisms that are going on, very active into the small business lending community. So we hope to be a resource, not only now, but into the future, of how people can access information, resources, training to help everybody get back on track. As Congressman Loudermilk alluded, there are multiple parts to the recovery component. The first one was the SBA disaster loan process. This has been in place for decades, and this is the normal response that happens when any normal disaster happens, such as hurricanes or tornadoes or even droughts. And so this program was still active when this latest disaster with the COVID-19 occurred. And so the processes remain the same, but also with the stimulus package, there were some additional components that were added into that. And this program has been modified just since it's been active in the last 2 weeks. So there have been multiple changes, and there'll probably be future changes that will happen with the disaster loan. Most of the disaster loans that we're going to focus on is called the Economic Injury Disaster Loan, or EIDL type loan process. This has a very simple process now of application, and we'll get into some details in just a moment. And then there's another half that Congressman Loudermilk alluded to, which is not lending from the SBA, but lending from our traditional lenders that are used to doing small business loans. They're used to the credit process, are used to this application, and handle volumes of loans. As a matter of fact, we anticipate that the disaster loan assistance about to occur is going to be equal to 1 to 2 years of total SBA regular loans that happen. And this all will be occurring within the next month or two. So that program, you'll hear the acronym of the PPP, has some components in there that includes money available to get businesses back up and operating, but a good component, which is some forgiveness of some of the proceeds and use of those loans. So we'll get into a little bit more details of that as we go through the program. But I just want to say the Small Business Development Center, we have a lot of resources. Our state website is Georgia, spelled out Georgia, SBDC.org. And we encourage our small business owners to tap into some of those resources, as we'll be going along with future resources, future trainings, future things that will help every business recover and grow strong again.
All right, Drew, thank you so very much. I just want to give everybody a reminder out there. We're going to go to 2 more panelists, and then I'm going to open it up for Q&A for a bit. And if you will, in your chat at the bottom, send the questions out to all panelists. I know early on it was suggested to send it to John Loud. That's not an option down there, but if you'll send it to all panelists. But at this point in time, I wanted to send it over to Sam Fuchs. Sam's a graduate of Citadel over in South Carolina. He had a degree in finance and accounting. I've known Sam for many years. He's been a business owner of several different types of businesses, mostly all about supporting small businesses. Currently, he's got a company called Blue Yonder, for example, and that's one that takes some of the specific federal laws that help small businesses not have the credit card fees that's part of a specific act Congress dealt with several years ago. It's something very unique that he helps. Now he's bringing about $20 million of savings each and every month to companies that process credit cards. My unique thing about inviting Sam today is, as we've been talking over the last week or two, just as he helps businesses in these different endeavors such as credit card, he had already been working with several companies and helping them apply for the SBA loans. But Sam, if I could turn this mic over to you for a minute and kind of give us an update, what it was like a week or so ago and where things are at right now for you. Thank you, sir.
Thanks, John. Thank you, Congressman, for being on the call. John, we're honored to speak to the chamber members today and the business owners here in Cobb County. It's been a bit of a challenge going through the information the last 14 days. I'm not a lawyer. I'm not a CPA. I'm not a consultant. I'm just a business owner like many of you guys listening today, and like to help other folks. As soon as we realized what we were finding out, I knew others needed this information, but the challenge was, as everyone's been saying, it's been changing daily and sometimes hourly. Even for this meeting, I've had a couple different outlines and have scrapped them just because the information keeps changing so quickly. So John and I have been staying in touch, as he mentioned, and he asked me to share what we've been finding. One piece of advice before I get started, a couple of things. Only believe info that's coming out with something that's a .gov behind it, or your trusted advisors. It was put out or put out by the local and U.S. chambers. This was told to us last Friday on a webinar that John and I attended with the SBA meeting, that you just have to watch your information that you're getting because it's been very conflicting. I've got all my information from our personal labor attorney, our business attorney, two of our CPAs, other business owners that I know personally that have submitted applications and spoke with the SBA service centers directly. Some of the other information I gathered obviously was off the SBA site, and that's been changing every day or two. The SBA service center in Buffalo, New York, I've had 5 different conversations with them. We've submitted on 3 of our businesses, so I've gone back and forth a good bit trying to make sure we had the most up-to-date information. As we started looking for answers, realized a lot of the information was false, or it was only contradicting itself. So I've relied on other folks like Senator David Perdue's office. I've dealt with Delaney Hicks in that office. Some of you may know her. She's been great to work with. The U.S. Chamber of Commerce and our local chamber here. The SBA local office over in Atlanta, ran by Terry Dennison, and even the U.S. Senate Committee in Washington on small business and entrepreneurship, led by 19 different senators, and they were to confirm some of our questions. So I believe I've assembled some pretty tight information. Let me tell you where we've been the last 15 days in the process. I'm a part of another group called the Brain Trust. It's about 45 CEOs here in Atlanta. It's ran by a guy by the name of Tom Kramer. And as soon as we started hearing that there could be some relief and a portion of it could be forgivable, we started looking into it. What I found was the information, like I said, was changing daily, and there was a lot of questions and confusion. The good news is I think we're at about a 90% pure information of kind of what's going on next. We had questions, a lot of questions, things like, should we apply for this disaster relief? How do we apply for the disaster relief? The loans are called EIDL loans, the disaster loans. Once the governor approved it, I think around on the 17th, we were able to apply. The questions were like, can we apply for both? The CARE Act wasn't really even, as far as we found, wasn't even called the CARE Act. So we were very confused on the information on, should you apply for both? Is one better than the other? If you apply for one and get some monies, does that cancel out the other loans? So the other big question was, and it's still somewhat of a mystery, not so much on the CARES Act, but on the disaster relief, is how much can you get approved for? And then again, how much is forgivable? So as we went through all these different processes, the first thing we did is we did finally get on the site, and it was not too cumbersome. It wasn't bad. You had to come up with a couple of items, and I believe you still have to submit these as you do your application. And it's not that difficult. If you've got a small business, you should have a lot of this information at your fingertips anyway, but all you needed all we needed to do to submit our application was we had to have a personal financial statement. If you're a small business and you have more than one owner, you have to submit a personal financial statement for anybody that's a 20% owner or more. You have to fill out a 4506T. A lot of you know what that is. It's just a release from the IRS to submit records on your taxes. And then we had to submit our 2018 taxes. 2019 weren't completed yet. So the process was pretty simple. It was just getting the information up. And then once we submitted, and you want to check this out, we submitted 3 businesses. On 2 businesses, we got an email back the next day saying that they received our information. So we at least were assigned a number and we filled out the application. So we're kind of in line. I think we were 131,000 in line when we submitted that Thursday, because other states were already approved for the disaster relief. And so once we started applying, we were assigned a number. So we've gotten applied now for the EIDL loan. And what the process now is, we're waiting for a loan officer to call us back. And one suggestion that we do is you want to call up there every 3 days to see where that process is and find out just to make sure that they've got your information. Because when we had to submit our information, we had to upload originally these documents, and a lot of times they weren't saying that they were even submitted by me. So I submitted them 3 different times just to make sure we had them. The good news is the process, guys, that I went through 15 days ago, much simpler today. As Drew was mentioning, the site has changed. It's a much simpler process, so you'll be able to get onto that site. So our recommendation is get one of these loans and get yourself in line and hope for that loan officer to give you a call back quickly. I have talked to 3 other businesses that did get a call back from the loan officer. We haven't gotten ours back yet, but here's somewhat of the formula that I was told, and it was confirmed, I'm going to say only because all 3 of them had the same story of what they thought they could apply for. One fella has a business of $3 million, and that's $3 million is his gross profit. It was right off his 2018 taxes, and your gross profit is sitting right there on, I'm not sure what line it is, but it's gross receipts, then it's cost of business, and then that line subtracts down to what your gross profit is. So his gross profit was $3 million, and they told him he would apply and be able to receive up to 1.5 million, which is 50% of his gross profit. And they were going to give him 15% up front. So in his case, on 3 million, he was going to qualify for a $1.5 million loan, and he was going to get 450,000 of it advanced to him. To what instrument, he doesn't know. So he is still waiting for that approval at this point, and that's where he sits. One update that came up today that we talked about earlier this morning is we got emails on 2 of the businesses that said you can reapply and they'll pump out $10,000 to you within 3 days. And where that's coming from, that money, I'm not quite sure. But after this meeting, I'm going to go ahead and jump on there and do that reapplication, because they'll give you an emergency 10 grand. And that 10 grand is forgivable right off the bat. The other thing that we've done is reached out to Wells Fargo, a senior executive there. And yesterday he said Wells and many of the other banks were in Washington discussing how they were going to get these CARE Act loans. You're going to want to apply for a CARE Act loan in addition. Both of these loans will forgive your payroll and all, but you can't double dip. You can have both loans, but you can only take the forgiveness off of one portion of it, if that makes sense. So the CARE Act is going to come out. They're going to either run it through the branches, they're going to run it through their call center, or they're going to run it through an online portal through all these banks. And the guys, my contact there is going to give me some updates as soon as they figure out which way they're going to do that. So that's what I have right now, and I hope that helps you guys, but you definitely want to apply for both loans.
Fantastic. Thank you, Sam. And a big gratitude over to you. I know when we had some of the chamber companies calling me last week about how to apply, I reached out to Sam because I know he had been through the process a bunch, and they sent utmost appreciation for your help there. Hey, there's a lot of great questions coming in. So if you guys will continue to do that, send it to all panelists. I've been communicating with some of the panelists a little bit, so we're going to be preparing to answer some of those questions. What I'd like to do now is turn it over to Jonathan Crumley. Jonathan's a principal at Taylor English Decisions. He's also a partner at Taylor English Duma. And he's going to actually take a few of the questions that I've sent over and probably incorporate that in some of his presentation here. So at this point, Jonathan would like to get some words from you, please.
Thank you, John. I appreciate it. What John didn't say in that introduction is that this means now they've handed the mic to a lawyer and a lobbyist. They're taking a huge risk with that, but I appreciate the opportunity. I do have to mention Representative Loudermilk and I go a long ways back. I helped him back in his days when he was a Georgia Georgia representative, moved his way up to the Georgia Senate. Now he's up in DC. The good news for all of us is he's remained the same Barry Loudermilk he was back when nobody knew who Barry Loudermilk was. He's a tremendous asset for our district, and he has actually helped me, he and his staff have helped me try to absorb this very thin 880-page bill that we call the CARES Act, and how it connects to and relates to the prior efforts, the Families First Act that just got passed a week or two ago. Representative Loudermilk mentioned that the regs will be coming very quickly. This is the fastest warp speed I've ever seen Congress act in the 10 to 15 years I've been engaged as a lobbyist and on the government affairs side. I have to admit, when the first crisis hit, I was a small business owner. I was essentially a sole practitioner, a lawyer. I had two other partners, and we experienced a phrase that I'd heard from a good friend that under the last Recovery Act, there were businesses that were too big to fail and those that were too small to succeed. I was in the too small to succeed category. I was frankly very worried that this go round, we would experience the same thing. But having read through all 880 pages a couple of times in the last 10 days, I got to tell you, that is absolutely not true. This bill is a phenomenal piece of emergency legislation that truly does drive the recovery down to real small business owners. I want to go through, there are a lot of questions, very good questions about some of the nuts and bolts. As Representative Loudermilk told me earlier this morning, he was going to keep his talk at the 30,000 foot view because he knew I was going to talk, and he knows I love to be in the weeds. The weeds of this bill are very positive for small business owners. I want to start with, there's been a lot of questioning about, can I do both the EIDL or emergency impact loan and the paycheck protection loan? Absolutely, yes. It is explicitly clear in the CARES Act that you may apply for both. If you're an eligible small business entity, you can apply for both, you can receive both. I want to talk first briefly about the EIDL loan and some of the limitations on that. Under the EIDL program, there still is some level of creditworthiness that the applicant will have to demonstrate and show. Those regulations are being softened, expanded, so because of the economic impact, but there's still that component to that loan. The EIDL loans are capped at $2 million. And as we just heard, it's typically a factor of the gross revenues of small business applying over the last 2 to 3 years. The $10,000 grant piece of that applies to anybody that's applied, but it's automatically given and forgiven to any small business that applies for an EIDL and is denied. So again, if you apply for an EIDL and for whatever reason under those regulations you're denied, you do get the $10,000 grant. It is not, it's not a loan, so you do not have to repay it. The EIDL is run directly through the SBA Business Administration. So there is a website on the SBA. I don't have the link off the top of my head, but there's a specific link for coronavirus 19 EIDL loan applications. It really is a very streamlined process, essentially 2 to 3 screens on the website. Timing of when the SBA is going to act on those and fund them yet to be determined because they're essentially getting flooded. Turning to the CARES Act, the PPP loans, Paycheck Protection Program loans, those are a tremendous effort by Congress to really drive down this recovery to the small business level and down to the tiniest business level. And in fact, even sole proprietors are eligible for the PPP loan. How it works, and here are who is eligible. Any small business, which is defined as a business with 500 or fewer employees. If you're in the hotel or restaurant business and you have multiple locations, multiple hotels, multiple restaurants, you look at each individual location to calculate whether or not you have 500 employees. It's not aggregated, it's separated out. Additionally, it is an expansion of those who are considered small businesses under the SBA 7A regulations. So in other words, if you are a small business that might have more than 500 employees, it's still possible you're eligible for a payroll protection loan. That depends on an analysis of the SBA definition of small business, which can include businesses more than 500 employees and a certain income cap or gross revenue cap over the last 2 to 3 years. That's a very specific, individual specific analysis, so I can't even really give you guidelines to take. If you have had a prior SBA 7A loan and your company still falls within that definition, you are likely eligible for the expanded 7A payroll protection loan. The payroll protection loan is limited to what is eligible to be rolled up into the amount of that loan. The loan is calculated on what they define as payroll costs, and which essentially includes all your traditional payroll costs that you will run, including the actual salary plus any benefits you provide, health insurance, retirement, anything that you as a business owner match for your employees counts towards that calculation. So you take a look at the last 12 months payroll costs for your company, take the average, multiply that by 2.5, add on any emergency economic impact loan you have already received or been approved of, that's your cap, or $10 million, whichever is the lesser of those two numbers. One of the key attributes to the Payroll Protection Act loan is in those payroll costs, you can include payments to independent contractors. So if you are a services business that typically uses independent contractors as opposed to employees, the commissions and wages you pay those independent contractors count as payroll costs. The other thing is the way the statute is written, if you are a sole proprietor and or an independent contractor yourself, you can be eligible for a Payroll Protection Act loan at that level. And the calculations of what the loan will be is a little bit different, but that is also available. Again, that's how I can tell you this bill really does drive this intended recovery down to the granular level in the small business world. What are the allowable uses for a paycheck protection loan? Payroll costs are clearly covered, as well as any costs related to the benefits you're providing. You can also use the loan to pay for interest on a pre-existing mortgage obligation, rent, utilities. Utilities are defined to include things like water, power, also includes telephone service, internet service, gas, and transportation. The rent provision is not 100% clear, but in a couple of different areas, I'm pretty confident it only applies to a lease for office space or rent for a property. It does not, in the way I read it, include rent for leased equipment or things of that nature. So once you get the loan, the application process has not been published yet. So these loans are not yet available. What we are hearing from the Department of Treasury and from the SBA is that they have this on a rocket process. I've heard rumors that it may be done by Friday. I would guess next week is probably more realistic in terms of when you will find the final regulations published and the application itself published. If you get the loan, and I recommend everybody that's a small business apply for it as soon as it's available, you then, if you spend the money on these payroll costs, your mortgage interest on a pre-existing mortgage, office lease rent or real property rent from a pre-existing lease, and then these utility payments over the 8 weeks following the loan closing, those amounts will be forgiven. And one of the beautiful things on the forgiveness side is a lot of you may understand that under the tax code, forgiven debt is deemed to be income, essentially phantom income to debtor. This bill expressly excludes any paycheck protection loan forgiveness from that calculation. It cannot and will not count as income to your business if you get any amount of it forgiven. While the regs and the application are not yet ready, based on our reading of this bill, we are recommending to everybody that go ahead and start accumulating the documents you would need to support the calculation of payroll costs. In other words, get all of your payroll reports from your accounting system for 2019 and 2020, including all gross wages, paid time off, paid vacation, etc. Then also, once you apply for the loan, continue to aggregate those documents so that you've got all the payments, your Form 940s, 941, 944 that you file on the employment side. Keep receipts or the checks, the canceled checks for your mortgage payments, your rent payments, all these other utility payments that can be used on the forgiveness side, because you will have to present that type of documentation for the bank to qualify it for the forgiveness program. One of the other tremendous pieces of this bill, it's definitely in the weeds here, but the bill clearly gives what's called delegated authority to the banks. So your local bank that is an SBA lender essentially is the gatekeeper plus the decision maker on these loans. They do not have to take your application and your information and they go back to Washington, D.C. and say, hey, am I okay to make this loan? No, this bill basically says you are delegated by the SBA to make those decisions. If you as a lender, a local community lender, a large national bank, if you have reviewed the application, you take the position that this is a qualified borrower, you have the authority to close the loan immediately. You don't have to come back to DC to get approval for that. Anyone that has done a sort of traditional SBA loan process will understand how much that is going to speed up the process. That's a lot of information in a short period of time. I'm absolutely willing to stay and answer whatever questions as best we can. But hopefully that gives you a good overview of the nuts and bolts of the PPP loan.
Thank you, Jonathan. Hey, I want to throw right back to you because we've got a lot of great questions coming in. And just to be sensitive to time, I do see that it's 11:22. I'm going to ask the panelists to stay around if they're available to. If you guys will continue the questions, let's bump this to 12 o'clock because I assure you the questions that we're seeing and the substance we're going to get to is also quite enriching. But Jonathan, let me go back to you with this. You'll touch up on nonprofits as far as their eligibility. We're getting several questions in that area. And the other one I've got from Pam Krupp, as far as if somebody had already laid off some employees, how do they qualify or do they hire them back? Can you kind of walk some folks out there that maybe have laid some folks off, now having this opportunity? What are their next steps?
Be glad to. Nonprofits are equally eligible as any other small business. One of the things I did leave out in my quick overview, one of the major differences between the PPP loan and the emergency loan is under the PPP loan, there are no guarantee requirements. There are no creditworthiness requirements at all. In fact, the statute itself says if you were in existence, if you're in business as either a nonprofit or a for-profit business as of February 15, 2020, and you have employees, you are presumed to be creditworthy. You're presumed to be eligible for the loan. With nonprofits, and because of that, with nonprofits, you don't have to do a personal financial statement of your board of directors. The same thing with a small business. There's no PFS required for the PPP loan because it's strictly a loan based on your payroll costs for the trailing 12 months and at 2.5 times from that average. On employees that you have previously laid off because of the requirements of what's been imposed on us, you absolutely can rehire them once you get the loan funded. What that will do is absolutely add to the amount of loan forgiveness that you're given. If you've been in business in 2019, those employees that you recently laid off, they're going to go into the calculation of what your average payroll costs are So their expenses ought to be covered in your calculation of what your loan balance is. You can then get the loan funded, closed, and immediately rehire them, because they then become part of the forgiveness side of the payout and the use of those proceeds.
Thank you, Jonathan. And just a good tip for everybody too. We are going to share all the panelists' contact information. As you see, Jonathan's got some rich insight. You know, the Taylor English Decisions Group and what they're digging into this is quite insightful. And I know they're going to be here to help even after this dialogue. I want to throw it back over to Drew Tonsmeyer, and he's going to share some items on the screen as far as even some of the application process. And Drew's also going to handle a few of the other questions that have just come in. So over to you, Drew.
Great. Hopefully people can see my screen. Let me give you the website of where the SBA Economic Injury Disaster Loan process begins. The website is disasterloan.sba.gov/ELA. Okay. And you will begin by clicking on the middle button, which says apply online. And I just want to step you through each one of these processes because there's some more information within that. The next tab is going to send you to is you're going to see a bright red tab that says apply for assistance. So click on that. And then there's more information about the different loans that are available, but you're wanting to click the Economic Injury Disaster Loan Program and the Loan Advance component. Then when you get to this site, there's one more click to get through. So there's 3 clicks to go through. And let me step you through this process because this is going to answer a lot of questions about eligibility. They have shortened the process. So some of the things that Sam had to go through, you're not having to go through. And the folks that have gone through this in the last 2 days are reporting this is a 10-minute process. So this is very easy to do. Excuse me. The first thing that's going to happen is determine what is your eligibility. And so you will have a choice of these, or are you a small business with under 500 employees? Are you a sole proprietorship without any employees? Are you a cooperative with no more than 500 employees? Are you an ESOP? You have a stock ownership plan. Are you a tribal small business concern? Are you an agricultural cooperative? Are you a business that has more than 500, but you are within the SBA size standards? Or are you a nonprofit 501c3, D, or E? There are different chapters that relate to a small business. So you're going to choose one. So when you choose one, then there are some affidavit components of this. This is part of the eligibility requirements. And I will tell you, most of the time, you better be checking these off that you are not under indictment, you're not involved in lobbying, you're not involved in any state government or city government or local government. So by checking these ones, clicking on the affidavit, you're going to click continue. And here is going to ask for the business information. So you'll put in the business legal name, then the trade name of your association. Notice the tabs that have a red asterisk are mandatory. You'll put in the EIN number for your business, or if you're a sole proprietorship, your social security number, and then your organizational type. So you will see that this will have a drop-down menu. So this drop-down is pick which are you. So many businesses might be LLCs or they might be S Corps. So you will pick which company you are. There's a question, is the applicant a nonprofit organization? No. Are you a franchise? This is when we get into the issues of franchise units. Each franchise can stand on its own. So it might be no. The next question is, what is your last 12 months of revenue dating back the 12 months previous to January the 31st? Or another way of putting this is, what were your gross sales from February the 1st of 2019 through January the 31st of 2020? That is your gross revenue. Second line is, what is your gross cost of goods sold? This is going from your tax return or from your internal statements. What do you report is your gross cost of goods sold? for some businesses that might be service businesses, they typically do not have their labor cost as cost of goods sold. Next question is, do you have any lost revenue due to rents not being paid? For a nonprofit, they're asking for the cost of goods for the nonprofit. And then they're asking for the combined operating expenses for faith-based organizations. So you can see faith-based organizations may be eligible for this. Then there's going to be any compensation from other resources, such as business interruption insurance, if you were eligible and you've received proceeds from that. Then they're asking for the primary business address. Notice no post office box. So we want the street address, city, state, and the county, the zip, and the business phone, and then an alternative phone number, such as your cell number, business fax number, business email. The date the business was established is month, date, and year, and the current ownership that you might have, current date of month, day, and year. Business activity is a drop-down menu. So you will pick one of these categories of what are you, and maybe you are a business service. Then underneath each one of these categories is going to be a listing of different subcategories. So how you pick which what you are will also give you the different drop-down list. So if you are a food and beverage store, you might pick that you are a bakery. This is the number of employees as of January the 31st, including your 1099 contractors. Then it's going to be click next, and it is going to ask for the personal information of that business owner. And again, we're not having to submit the tax returns. We're not having to submit personal financial statements, not at this time. There might be some additional information you can add. When you submit all of this, you should get back a confirmation loan number. Trick of the trade is take your phone, take a picture of your loan confirmation number. With that application number, you are now going to be eligible for that advancement that the SBA is trying to get done in 3 days. That is the goal. We have never been under this volume before, and the SBA has been changing all of its methodology to be as responsive as possible. So they're doing everything in their power to get these checks processed as quickly as possible. So the goal is 3 days. It may not be exactly 3 days. No one's ever tried to do $1 million, $10,000 checks at once. So look, it's going to take a lot of patience with all of us to understand this process. But that is going to come out as a $10,000 advance. That $10,000 advance does not have a repayment requirement. So you'll hear it called an advance with non-repayment. A lot of times we might call that a grant that is happening. Then the SBA will continue with their underwriting process, and they will determine a loan amount. One of the basic formulas that's been used in the past is 50% of your gross profit margin. And again, that's taking that information that is your sales minus your cost of goods leads your gross profit. Typically, the maximum amount of a economic injury disaster loan is 50% of that gross profit margin. This may take another 3, 4, or 5 weeks to get processed. In the meantime, this is when the PPP loans might be in place by the time that you find out what is your total amount of disaster loan assistance. The goal is, again, get that advance into the hands of the businesses as quickly as possible, that $10,000 advance. Then you may want to be applying for the PPP with your lender. Just keep in mind, the lenders have not received their policies and procedures from the SBA as yet. So the banks are working on this, but they're having to wait for the SBA to kind of give them their rules and their procedures and their forms that they need to submit. So it's just going to take a little bit of time. This could be done in a matter of days to get this process, then each lender is going to have to work through their own internal processes so they can get this done. So those PPP loans probably may not be available till next week. And part of that loan can go, is capped out at 2.5 times that total payroll cost. Again, there's going to be a separate application process that each business will then process for these PPP loans with their local lender. Now, the portion that is forgiven is also going to be a factor of what portion did you receive in advance. For instance, if you were approved for a PPP loan, say for $80,000, because that was 2.5 times your total payroll cost, you've already received a $10,000 advance. That $10,000 advance counts towards the forgiveness portion of that loan. But that means there's going to be another $70,000 of that $80,000 loan that will also be forgiven. That forgiveness procedure is something that is going to be done by the lender itself. Again, the SBA will not be involved in this. This is your local lenders that have to come up with their documentation process. So this forgiveness may not happen for a while. And the forgiveness portion date begins from the moment you receive authorization from the lender or when you receive proceeds from your bank. And then it's for the next 8 weeks. So for instance, suppose that your loan was approved by the bank and you received proceeds on April the 17th. Then that is the starting point of 8 weeks from that point of the summary of what that business has actually paid out in rent, payroll, healthcare benefits, utilities, and interest on existing loans. So there's an 8-week period of what has actually been paid out that will be part of the forgiveness portion of that. So we know many businesses will not ramp up immediately. They will take weeks to ramp back up, but those portions that are paid are going to be forgiven. And the goal is by the time we hit that 8-week cycle, everybody is back into their full employment process and proceeding as best they can into the regular operations. So the process is start with the economic injury disaster loan program. Go through the steps. You can see this should take about 5 minutes. If you go pull your gross sales since February of last year through January of this year and your cost of goods, that has probably saved you 5 minutes in the process, and you'll probably be able to process your application within 10 minutes. And then hopefully the SBA will have their first advance to you within 3 days. That is the goal. Then next week is when the PPP programs are rolling out, is working with your local SBA lender of getting that. Now I will tell you, most of the banks are probably going to start with their current customers because they're trying to keep those customers happy. So they're going to have to go through that process itself. One of the other differences between the economic injury loan and the PPP loan is the interest rate. The interest rate on the economic injury loan is 3.75%, and it's set at a 30-year amortization. And if you would like, you can have an automatic 12-month deferment on those loan payments. And then on the PPP loan, is that term is going to be set for 10 years on an amortization, and the maximum interest rate on that is 4%. And so a lot of businesses are wondering, which do I do? Going, you may not know that answer at this moment right now, and maybe next week or 2 weeks or 3 weeks, that answer might be clear of which do you do. And so that's why you go through the processes in the decision mode. Don't worry about making that decision now. Apply for the economic injury, then apply for the PPP, and then you'll have an opportunity to weigh each factor to go, which one is best for my circumstance.
Thank you, Drew. Great, fantastic insight. I got a few real quick questions, follow up to you, then I'm going to throw it over to Jonathan. One that was asked is, what's the cost of goods sold in that form you were going through for a business that's a service-based business on that form? What's the cost of goods sold?
For most service businesses, they have a zero or very low cost of goods sold. So their gross profit number is probably going to be their cost of their gross profit will be their net revenue, their total net revenue. So that's how most service businesses are done. But if you look at a restaurant, their cost of goods is the cost of foods. And then some businesses might include just their direct labor cost, but not their managerial cost.
Okay, fantastic. Hey, Jonathan, I want to throw over to you now, because one thing that you and I were talking about yesterday, I thought this tidbit of insight you laid on me early on is when you go to apply for these loans and you get this money through your bank, number one thing Jonathan said is open a new bank account where that money gets deposited into. You will have the ability to track each and every one of those expenditures, to go towards rent, go towards employees, payroll, all the specifics that folks have been helping us kind of lay out today. You'll be able to track that and show exactly where that money goes. So if somebody knocks on your door later and said, how did you use this money? You're gonna have a great way to show that. But Jonathan, I'm getting a lot of questions on employees. So I've got a 1099 person. Is that an employee? How do I handle that? I've got somebody that, actually, let's talk about servers. There's questions out there about servers. You know, they get their base pay, but it doesn't include their tips. How do I deal with that aspect? If I'm paying somebody that just, that's gone, actually, let's say I've got somebody laid off. These all fall under the same area. Somebody that was laid off and I rehire them, how long do I have to rehire them for and retain that? The other part is, if I'm going to be paying people that are coming to work and I'm paying people that are not coming to work, that's kind of a tough struggle, because I'm bringing them back on, but my establishment can't be open to even have people come work, but I'm paying them because I'm going to have this loan money, or I've got some operation that can be in the field but can't be in the office because of the gathering. Can you address several of those for me?
Yeah, be glad to. First, we'll take the easier one first. In terms of tips, wait staff in restaurants, the amount of compensation paid for non-salary, specifically includes payment of cash, tip, or equivalent, is included in the calculation for payroll costs, that defined term in the statute that gives you the amount of loan that you're eligible to receive under the PPP loans. And if it's in payroll costs and you spend it for payroll costs, it follows that that's also on the back end forgiveness side. As John mentioned, I said early on, anybody that gets one of these loans, we highly recommend you set up a separate account with your same bank that processed the loan, so that you've got one source of information to go to get the proof that you spent it on the forgivable items. In terms of rehiring and, how does that play into the loan forgiveness? There is a provision in this program that's triggered at about it's at 25% reduction in the number of employees or the payroll costs for those employees as well. If you go beyond a 25% reduction during the 8 weeks after closing on the loan, then the loan forgiveness gets reduced as well. So in other words, if you spend less than 75% on payroll cost after closing than what your average showed pre-closing, then there's going to be an impact to how much of that PPP loan will be forgiven. As Drew mentioned, to the extent there's an amount remaining on your PPP loan after the forgiveness calculation, it rolls into a 10-year loan at a maximum of 4%. We are hearing that the Treasury Department, the Small Business Administration are going to be encouraging banks to come in at loans under that 4%. That's the cap. That's not the mandatory amount of interest that has to be charged. It's a tough question on whether you rehire folks and how do you balance that 75% count, which is in my mind one of the reasons an allowable use and a forgivable use of the funds includes things like paying rent for your facility, mortgage interest payments, utilities, et cetera, that are not directly related to salary costs, but are actual expenses to help you stay in business. You have to make an individualized decision as a business owner. What is the best use of these funds for the long-term stability and growth of my company? I don't think that in this seminar we can give an answer to each and every business entity out there. For nonprofits, you are absolutely eligible. And again, because there are no personal guarantee requirements or creditworthy requirements under the PPP loan, if you've got payroll as a nonprofit, if you pay to independent contractors for services, then you've got a basis to get a loan, and you also have some expenses that you can pay out of the loan proceeds so that they're forgiven. One thing I didn't touch on that we probably do need to talk about is in the calculation of your payroll costs. If you have employees who are paid more than $100,000, only the first $100,000 in salary counts towards your payroll costs and your average payroll cost of the preceding year. The same thing applies on the forgiveness side. If you have employees that are salaried at greater than $100,000, only that first $100,000 counts towards the forgiveness quotient.
Thank you, Jonathan. I got a unique one for you here. So we've got a staffing firm that's on board with us. They themselves have less than 50 employees, but they collectively have over 500 employees that are contracted out to all of the different businesses. How do they go about handling this approach?
That is not addressed specifically in the statute. Hopefully there will be some guidance from the SBA and the Treasury when they issue the regulations on this, because as the statute is written in that situation, unless they otherwise qualify as a small business concern under traditional SBA definition, looking at the industry and gross revenues, they would be ineligible under the PPP program, because even those employees that are leased out or loaned out, essentially they're co-employers, so they're going to count against the staffing company's headcount. One other issue that I saw a couple of questions. When you're doing your employee headcount for purposes of payroll costs and for purposes on the forgiveness side, and whether or not you're fluctuating over or under the 25%, it is a headcount. It's not an FTE calculation. So temporary, full-time and part-time employees all count. Each one of those counts as one. So it's a head count. If you've got 50 temp employees, 50 part-time employees, and 50 full-time employees, then it's 150 employees under the Act.
Okay, great. That's perfect clarification. Hey, I want to remind everybody, we're going to wrap things up here right by 12 sharp, so that you know there are a lot of questions. We're going to jump to a few more. We're also hoping to get these questions out to share with all the attendees after, for some of those that we do not get to. Sam, I want to throw one to you. So you've guided some folks through the loan process a week or so ago. You know, now we've got this new application coming up. What should they do? What's their next steps?
All right, if you had applied already for a loan, we just got this email this morning. So this all changed. Is you've got to go and reapply. Is to be eligible for the advance, you've got to go through the new portal process, which again should take you less than 10 minutes to do. But so if you applied and you got a number last week or 2 weeks ago, it is go reapply with a new application process.
All right, go ahead, Sam. You've got something.
The other thing, yeah, definitely stay on that process on the EIDL loan, but I would be in contact like we have with our personal banking contacts, because they will be rolled out information on how that loan process is going to go through the bank. So if you can get on any list, whether they're going to do appointments, whether they're going to do it online, any communication you can get from your personal banking relationships would be a big plus for you, and have all that information, as the rest of the panel has said, have all your finances together.
Awesome. Hey, here's a question we're getting lots of out there. Folks have this uneasiness. If they're not in a bad financial situation right now, so the business is not being constrained so much for where the quarantine and everything is, if they go get this loan, what's going to be the requirements or the examination that's going to be put through them to show whether they were in need or not in need? Is this something, if I have payroll and I have rent and I have a mortgage to pay, do I automatically qualify because I'm a small business? Or is there going to be some base need question that happens later within that area that somebody could be disqualified and it gets turned to a loan instead of a grant? Who wants to grab that one?
I'll take that. The statute is very clear, at least on the PPP loan. Everybody is considered to have been impacted by the government's reaction to COVID-19, so they're eligible if across the country. And so there's not an issue of, again, that's why there's no creditworthiness. There's no assessment of, how bad were you impacted by COVID-19. It is presumed that every small business in America has been impacted by the government's reaction and response to this virus. And it's crystal clear in the statute.
Okay, how does a real estate agent or an appraiser or somebody that gets kind of based on the way their income goes, how do you guide them?
They would be qualified as any other small business. If they have employees, then it's easy because they just fall as a small business concern. If they're an individual, a sole proprietor, it's a little more complex, and probably don't have the time or to address those specific instances. Just know, as a sole proprietor, you do have some eligibility. It's a different set of documentation you've got to provide under the PPP loan than a business would, but you are eligible. It's very clear in the statute that payments to independent contractors or received by independent contractors and sole proprietors count as payroll costs as it's defined in the statute.
All right, fantastic. Drew, over to you. I'm seeing a lot of questions come in on the confusion regarding the $100,000, as a business owner, how does that affect them, or as a sole proprietor? I did see a question there about somebody thinking that's accumulative of somebody's payroll, and I know that you can help clarify that for them.
I hope I can. And again, some of these statutes are going to be clarified later. We may not have perfect clarification because there are a lot of companies that the owner's taking a distribution and may not be taking an equal amount in salary. Our understanding is based upon the salary, but there could be clarification about if it includes owner distribution in that 100,000. If it is, it's that cap of 100,000. So for instance, if you were the business owner and you had a salary of 130,000 a year, then the cap of your deductible forgiveness will be 100,000 of your 135,000 in a year. And it's really only during that 8-week period. So it's really the amount of payroll that is expended in that 8-week period from the time you receive those proceeds.
Hey, John, Sam, I wanted to add one comment to that. Basically, what he's saying is you're allowable $8,333 a month. So even if you're self-employed, you should be able to write off $8,333 times 2 months. So you can write off your $16,666 as it stands today for 2 months. Does that sound right to you, Drew?
That does. Thank you for the math. that does help.
Awesome. One last question, and I want to remind everybody, this has been recorded. We are going to share this later, and we're going to see about trying to get some of the other questions that were in there and maybe not answered, addressed in an email format after. One question I just got that I know is on many folks' mind because it's come here. I've got some employees that are now getting concerned or fearful and would almost want to not go to work, but they want to still get paid. How does an employer deal with that situation? Jonathan, you want to take that one?
Why do you send me the hard ones? That's a tough one. The act itself and the loan doesn't have an actual work requirement. They just have to be employees. If you as a business owner make the decision to continue paying an employee, even though your business isn't open, like a restaurant, you're going to have limited ability to operate because of the stay-at-home orders in Cobb, at City of Atlanta, other municipalities. If you as a business owner decide that it's in the best long-term interest of your business to pay people to stay at home so that they're available when things kick back up, there's nothing in the PPP statute that says that's not a forgivable use of the funds. It has to be salary, and then it's forgivable. One quick thing, I saw a couple of questions about, there's some confusion about this 8-week period. In order to be eligible for the forgiveness, you have to spend the qualified amounts, the payroll costs, and the eligible expenses for forgiveness from 8 weeks after the date the loan is closed, which would be the date it's dispersed to you. That's when the clock starts ticking. That's when you start paying out the payroll and other expenses that are covered. And There was one other question that escapes me right now, but I believe it has to do with the same question about, hiring and rehiring employees. There are other benefits in the CARES Act that we hadn't even touched on, which includes some significant unemployment benefits. So your individual employee, frankly, may be better off on unemployment during this period. And if they don't become eligible or want to be rehired within your 8-week period, then they don't count towards your forgiveness and the use of the funds.
That's a great point, because there are actually just questions just coming on that. Another question that just came in there was that if your employees are working from home, does this money, and the answer to that is yes. I know that we're kind of in our wrap up, and I want to be able to give each of the panelists a final thought here, and then I'm going to throw it over to Sharon Mason, our Chamber President and CEO, to close us out. Drew, can I throw it to you first and then go to Sam?
Sure. Easy. What's the first step? Go apply for the economic injury disaster loan. That's the first step. Step number 2 is probably going to happen next week, of contacting your lender where you have a relationship to see what their process is. More than likely, they're going to set up special online portals for applications. So every bank is going to respond a little bit differently. It's just, you got to be patient. You can't apply for the PPP loan today. There's no process in place, and no bank has it in place. So we do the first thing that we can. And so first step, apply for the economic injury loan. You'll receive that $10,000 advance that is completely forgivable. It doesn't have to repay, and it gets you working capital that can be used for any operating expense you have for your business. It could be used to pay rent. It could be used to pay insurance. It could be used to pay your utility costs. It could be used to pay for food if need be. So it could be used for any of your normal operating expenses.
Thank you. And ladies and gentlemen, that's Drew Tonsmeyer with Small Business Development Center, and a great resource to be able to turn to. And again, we'll be sharing the contact information of folks after this is completed. Drew, thanks for the insight today. Next, I want to throw it over to founder and co-founder of actually Blue Yonder, Sam Fuchs, for closeout comments.
Yeah, thanks, John. I think any business owner, obviously, is what everybody said, is apply. You do want to move forward. If someone was to knock at my door and said, hey, the government or any other entity is going to pay my payroll for 2 months, come on in. I've got a hot cup of coffee for you. But, just stay adamant on the process, protect your business, protect your family, but also protect your employees with communication. Just a tip, communicate with your employees. They're pretty nervous right now. We've been fortunate enough with our 40 or so, we've got them all working remote. We had a lot of them working remote prior, so we knew the process. But we've been doing a good weekly communication with them, let them know business as usual, as long as you can keep them in the seats, or even if they're at home and they're not producing for you, but just give them some good communication. So anyway, keep strong, man. We're going to get through this. I think most businesses and most families will be in good shape in the coming months, and we appreciate the government actually stepping in and doing some of this for us.
All right. Thank you, Sam. Thank you so much for being part of this today. Next, I want to throw it over to Jonathan Crumley with Taylor English Decisions. And Jonathan, if you'd share some closing statements.
Thank you, John. Real broad picture, given where we are as an economy, everybody knows we are in a steep dive. The unemployment numbers are unbelievable, historic. If 10 years ago, somebody had knocked on my door and said the infamous, I guess, Ronald Reagan quote, I'm from the government and I'm here to help, I would have slammed the door. The good news this time around, they have come up with a bill that actually provides help, not just help to, the big Wall Street hotshots and the, big businesses too big to fail, but every business from coast to coast, top to bottom, east, west, north, south. I highly recommend that, since these are 2 different loan programs, EIDL, Economic Impact Disaster Loan, and the PPP, or Paycheck Protection Plan loan. Those are 2 different programs in the SBA, 2 different sets of requirements, 2 different sets of allowable uses of the funds. The key distinguisher between the 2, the EIDL loan, that is predominantly not a forgivable loan. If you take down an EIDL, you will eventually, as a business, have to repay that loan. It's a much longer period of time that you have to pay it back. but they're very minimal forgiveness provisions. On the PPP loan, the Paycheck Protection Loan, those, if you do it correctly, can and will be 100% forgiven. It is essentially a cash infusion into your business so that you can do what you need to do to sustain over the next 8 weeks after closing to keep your business afloat, keep it running, keep your employees taken care of.
Thank you so much, Jonathan. You know, as I started this off, I talked about the unprecedented times. I also talked about Together We Can. And I hope today you've gotten to experience some of the insight of the resources of our Cobb Chamber and partnerships with the panelists today, our congressmen up at DC and many other elected officials at the local and state and federal levels are here to help us. I said the chamber is here to help each and every one of you. We know that you've got that perseverance and that determination inside of you, which is why you took the time today to even be part of this call. I hope that you will stay connected to the chamber. The resources that are going out daily are there to help each and every one of you. At this point, I want to throw it over to our Cobb Chamber CEO and President, Sharon Mason, to close us out.
Well, thank you all for joining us today. Thank you to our amazing panelists for providing their expertise, and Congressman Loudermilk and our entire congressional delegation for making the federal stimulus package available. We look forward to providing these resources to you. We will send out an email with this recording as well as answers to the rest of the questions. We tried to answer as many as we could, but we'll answer the rest of the questions that you have. Some great questions, and we really appreciate your participation. This is just a start. As I mentioned, your Cobb Chamber, we are focused on helping you, supporting you through this, providing resources, advocacy, every angle that you need to help you overcome this. And so we look forward to providing more free webinars like today, more resources. So go to cobbchamber.org. We'll continue to keep you updated. Thank you again. Together we can and we will overcome this. Thank you.